Today's video, I'll be walking you through how to trade support and resistance effectively and how you can view the market from the areas of smart money so that you will not fall victim or form the liquidity for the big banks to trade. These are what I and my students have been doing week in, week out to come out profitable in the forex market. If you want to be profitable, watch this video to the end. Make sure you like, subscribe, and share this video so it can reach a lot of what people. So without wasting time, what is support and resistance? Support and resistance are simply zones where price has touched at least 2 times. Then on the third touch here, for support, on the third touch, you can take that trade. Now this is what has been taught to many retail traders. We were taught that once price comes to a zone that has been touched at least 2 times, we can believe in that zone that level will hold and push price to the upside, just like this. That is support. And on resistance, if a zone has been touched at least 2 times, then the third touch is where we should be looking for trades, and the fourth touch as well. As long as price keep trading within this zone, then that is your resistance, and you should look for trades to take the price down. Now this is fallacy, okay? It makes you to lose money. What I want you to do is this instead. A support and resistance zone that you should be trading is fresh support and resistance zone, meaning zones that have not been tested at all. This is what you should be doing. The moment a zone or a line have multiple touches, it becomes liquidity. Okay, it becomes liquidity for the banks to grab, because they know that a lot of traders will be trading there, okay, keeping their stop losses below that support and above resistance. So when they do that, they will take price, clear out those liquidity before price will move in your intended direction. And that is why most retail traders lose money in the forex market. So in this case, I'm going to show you how to avoid all of this and trade only fresh support and demand. Now, for example, you see in this case here, market moved down from this point here to this point, and all of this is a ranging market. This is a ranging market. When you see yourself in a ranging market, trading support and resistance is good, but you have been trading it the wrong way. Now when price comes in here, you should be able to identify zones, demand zones, other blocks that will be responsible for taking this price to the upside. Okay, you should be able to identify zones that will take this price to the upside. Now the moment price move up, you want to be sure that it breaks structure for that level to be respected. Okay, if price, most times price do not break structure in a ranging market. You just see price either grabbing liquidity here and then trade back down. The moment that happens, this becomes a weak area to start looking for buy. Okay, to start looking for buy, because the low here is a weak low. The low here is a weak low. It failed to break structure, okay, to give a BOS. So when that happens, you should not be trading this area again, because that area now is liquidity, where smart money and every other traders like me, okay, will start waiting for price to go below that, taking out early buyers, okay, before moving up. Now what do you do when market fails to break structure above? Now you enter the market, price move here but fail to break structure. Now the moment this happens, I will simply look for a fresh demand zone here. Okay, I'm going to look for a fresh demand zone beneath these equal lows, because as at that time this will be equal lows. Okay, and you want price to take that equal lows into this point of interest. Now this point of interest that is being highlighted below the liquidity is high probability. Why? Because it has inducement. Because a lot of people will be buying here without understanding that that level is liquidity. Okay, same thing with your resistance. Okay, when price comes the first time untouched support and resistance, which is your demand zone, your order block, these are support and resistance because they are areas that repair price. Okay, now when you identify them, you take that trade. In that case, you monitor for a break. If you don't see a break of structure, then that level becomes liquidity because it becomes a weak eye. Okay, it becomes a weak eye. A weak eye simply means price failing to break what structure, so it becomes a liquidity for the smart money to take. Now this is where the retail traders comes in. This is the first touch. Now the second touch, retail traders have been taught to what to sell from there. Okay, because they see that that level held price is not just by holding price. Did it break structure? Ask yourself, this level, did it break structure? If it does not, it becomes a weak level, and price most likely will what will pierce through it, grabbing all the stop loss above, okay, before heading to the downside. So you need to understand this. Having an understanding of support and resistance is not a bad idea as a smart money trader. You should not throw it away. Instead, use that psychology and put it in your advantage. Now, what do you do instead? Now, what I do is to identify a supply zone above. My supply zone could be order block, it could be IPA, it could be hidden base, whatever it is. This level is high probability. Why? Because it has inducement in form of what? A resistance below it. So that when price collect all these stop losses, taps into this, they become a high level to what to trade from. Now you can either trade a kind of set and forget, putting in your limit with stop loss above, or you wait for confirmations. Okay, I did a video on confirmation. If you want to know how to use confirmation, you can check the link in the description. You are going to see that. So this is what I want to show you today. Let's look at the chart and see how we would have traded support and resistance. This is gold in the 4-hour time frame. Okay, prior to this, you can see this level here. This is what I mean by untested support zone. Okay, this level is good. This level is good for you to take your buy. Okay, because this will act as a support. Now, when price moved from here now to the upside, it failed to break structure. Okay, it didn't break structure, so that makes this low here a weak low, and that becomes what? Liquidity. This is where the retail trader will come in here. The retail trader will come in here, okay, to buy, because they've seen that this zone is a support zone. Okay, touch here, it repelled here, and also repelled here. But what happened eventually? Price came collecting all the stop loss, okay, and then tap into this region here. This is what I say. When you see after the first move, you do not engage in this anymore, because it becomes equal lows liquidity. And what you need to do is to wait for price to come and mitigate this order block, which serves as what? Demand zone. Now you can see the first touch here created what? A break of structure. Okay, this is a strong sign that I can continue to trade on this support zone, because all of these are support zone. First touch, second touch, the third touch I can trade. Why? Because I understand that this low here is a strong low. Okay, I understand that that low is a strong low. But however, if we look at it, price came back Now this is a strong low because it broke structure and probably went ahead to break all of this. So if you look at this side again, you can see this is untapped support, but in this case it didn't work. But I won't be looking at here because I know it will serve as what? Inducement. After a strong, the first pullback is an inducement. So I'll be looking for this level here to trade, and this make this zone a high probability zone because of the inducement it created here. This is inducement. Okay, support and resistance traders will be wiped out here, price taking their stop loss into this area. Then from here you can see this push to the upside. Now this push to the upside, these are trades we took, these are trades I took personally, and then you can see that this trade broke structure to the upside. I was monitoring it to break this structure to verify that the buyers have stepped back into what? Gold. I have been bullish on gold since last week because I held in the weekly analysis I do with my members. I told them that gold is bullish. Okay, so we were expecting price to move from these zones. Yeah, this is the buy zone. We're expecting price to move from that zone, and you can see this created a what? A break of structure. Now all of these are support zone. These are support. Okay, why is it not taken by the smart bank? Because you can see it broke structure to the upside. Okay, and that makes this level a high probability level. Okay, we call this a strong low because it took some form of liquidity here and broke structure. So what we need to do now is to identify this level again. I can continue buying this level of support. I can continue buying this level of support, okay, without having any worries that price will come and take my stop loss, because I understand the concept of strong high and strong low, okay, and I understand the concept of fresh support zones. These are fresh support zones. The moment this move in and fail to break structure, then I will end this support trading that I've been doing for the past few weeks now. Okay, so what I'm expecting in this gold market is for price to come down. I'll be looking at this area here. Let me clean all of this. I'll be looking at this area here to continue going higher, and also this area here to continue going higher. So this is what I'm expecting, and you should also be trading your support and resistance this way, having an understanding of break of structure, market structure. In overall, these are all ranging what? Market. Okay, but because I understand that those lows took liquidity, they are tradable. Okay, the lows took liquidity, they are tradable, and this is what you should be back testing every time. I will see you in this video.